We live. My check, my check, my check.
Been moving right with you too. No lag, no nothing.
Shit, Cliff Fair. Big ass stain on the shirt and shit.
Stain on the shirt. God damn.
See this. Alright, we live, man. Share screen. Hey yo, Quez, if you in here, let me know. If you in here, just type me to the chat right quick. And let me know if you hear me or not. Say yeah, we can hear you. Oh, facts. Let's get it. Alright, so hold on. Let me set everything up right quick. Wait, why is it doing that? Hey yo, hold on, let me make sure everything good right quick. All right, we about to get into a little one-on-one right quick. With price tag, your Quest, when you in here, let me know when you in here right quick so we can start. Why is it showing half of the screen? Hey, do me a favor, Don. Go on your phone right quick and go on YouTube. This is why I like going live on my desktop.
I see.
You see the full screen? All right. So, what you need help? So you say you need help with? You say you need help with candlesticks? Like you say you need help with? It says, you said, yeah, just bought me a comparison book and red maker and green marker today. Yo, Quay, what they do? 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 All right. So, what you say you need help with today? You say you need help with candlesticks? What you say you need help with? Candlestick basics. All right. So, you remember what we did? You remember what we did the first time? About the candlesticks? About there's 4 key components to a candlestick. You remember? You remember that? I'm gonna switch and make the charts. I'm gonna go back and make the charts. Yeah, the 4 key components. All right, so type in right quick. Type in the 4 key components of a candlestick. Let's see if you remember. What's a 4 key component to a candlestick? While I change the colors right quick. I'm gonna put the colors back to regular so you can see it. So remember, there's 4 key components to a candlestick, right? There's a open. Yo, where is my template, bro? Why is shit doing this right now? Okay. All right. Let's go to the basics. All right, wow. Let's get them. I'm gonna go black. All right. So let me delete this chart. So you can see everything. All right. Let's go on a higher time frame. Okay, bye. Okay. Then open, great. So you're absolutely correct. You're absolutely correct. You're absolutely correct. So there's four key components to a candlestick, right? So there's a, let's focus on, so there's two type of candlesticks, right? Remember, there's a bullish candlestick and there's a bearish candlestick, right? The difference between the two candlesticks is basically one going up and one going down. Now, the bearish candlesticks, if you look at it, right, the four key components to a candlestick, yes, you're correct. But the difference is now we got to understand the difference. So look, a bearish candlestick, this bearish one, all bearish candlesticks, we want a higher time frame, so the candlestick will be a little bit bigger. All right. Right now we're on a 1 hour, we're on a 1 hour chart. All right, so you see how all bearish candlesticks open high, right? You have to write this down because that's how you're going to understand it. Bearish candlesticks, which is candlesticks that are red, they open high and they close low. Okay, you have to understand that. They open high and close low. Bullish candles open low and close high. You got that part? Let me know when you got that part. So you have to understand that. Like, that's the basics of this. Bearish, open high. There you go. Make sure you. I'm telling you. So look, I'm really talking to only you. The reason I'm telling you to write it down is because when you write it down, it makes your brain understand it more, right? Because remember, we're gonna see this all the time. We're gonna see this every day the moment we're on the chart. So the more we can identify what's really going on, the better we're gonna get at it, right? So the more you actually write down, the more you're actually gonna retain it. Because that what works for me, right? So bearish candles open high and close low. Bullish candles open low and close high. So that's basically the first step. So this is the basic, just knowledge with candlesticks. You see how, and then you see how you got multiple candlesticks all in one. You see what I'm saying? So another thing you have to understand, what's a trend, right? Because the candlesticks, they're going to form and make trends. So there's three type of trends. There's three type of trends. Hold on, right path. Okay, so there's a uptrend where price is going up, going down, going up, going down, going up, going down, going up. Okay, that's the first trend, and this first trend is called a uptrend. Let me type this in. It's called a uptrend. Let me tell you why it's called a uptrend. Uptrend. All right, and this is an uptrend because it's making higher highs and higher lows, makes another higher high and make a higher low. So you see how this low and this low and this low is getting higher and higher and higher. That's signs of a bullish order flow. Okay, how do you determine your daily bias? Okay, just how you determine your daily bias. Matter of fact, I'm tripping. I'll supposed to go on Instagram and let people know I'm live. Hold on 1 second. Answer a question on that. All right, quick. One moment. Let me go send the link right quick. Let me send the link right quick. And then later on, we can get into the trade I caught, because I caught a marvelous trade today. So I'm about to do my journal and stuff like that right now. So it's important to journal. Despite what people may say, it is important to journal, bro. You have to journal because that's how you actually learn and make mistakes and fix the mistakes. Right? All right, we got it posted. He said, "Can you say that again with the uptrend?" Okay. Just so before I go into the daily bias, I'm gonna focus on quezz right quick because that's why I'm focusing on quezz. So any other question I will answer after he gets this uptrend part. So let's delete it again. So let's remember, it's step by step. Don't rush. You don't want to rush trading. It's okay to take your time and to learn things, right? Okay. The market moves in three ways. Let's focus on the first one. The first one is called it's in the uptrend, which means the market is basically going up. When the market is in the uptrend, the market is going up. So when the market is going up, this is how it's going to look. It's going to start low. It's going to make a higher high. The market is designed by making higher highs and higher lows. So we just focus on the uptrend. So this is the uptrend. It's going to go make it high. It's going to come down, make a low. This is when it starts. All you're looking at is, okay, do it makes a higher high, which means a higher high basically means that right now we have a low and a high form. Hold on. All right. Right now we have a low and a high S form. So right now this is one high, which is the liquidity. Right, the liquidity is where the highs and lows are. We have another low here, so we have a low here, and then we have another low here, right here, because it just made this. So now, are we looking at do it make a higher high or do it make a lower low? So if we're in the uptrend, I'm expecting it to do higher highs. So we're gonna start here. It goes up. It makes this low. We take out this high. So that's how you'll see me saying, hey, can you go back to your phone, my Chris? Because I need to see the chat. I need to see what you write. Because for some reason it's not popping up on me. All right. So it makes a higher high. Why does it make a higher high? Because look, it swept out this high. So now it comes down. And do we take out this low right here? We stop here and go back up. We do not take out this low, but we take out this high. So right now, we're looking at, this is what we're looking at right now. The market created a low, it created a high. It created another low, and then it took out this high and created a higher high. So now this is the new liquidity here. And then this is, so now we have this liquidity, which is, this is a low. And then we have this right here, which is another liquidity, which is another low. So now I'm looking to see, okay, do it continue to go higher and higher, right? So look what happened. It comes up, it makes a higher high, a higher high. So that's a uptrend when we're making higher highs. So because this high is higher than this high, this high is higher than this high, this high is higher than this high. And look at the lows. This low is higher than this low. This low is higher than this low. This low is higher than this low. So we are making higher highs and higher lows. That's a uptrend. Now, did you get that, quezz? The same thing for bearish. With now, there's a high, there's a low. There's a lower high, lower low. Lower high, lower low, lower high, lower low. This is a downtrend. Why is this a downtrend? This is a downtrend because we're making lower lows, lower lows, lower lows, lower lows, and we're making lower highs, lower high. This high is lower than this high, and continue. Did you kid that part? Now that's bearish. He said higher highs and lower lows. Yes. So that's the difference. So that's the next step from learning about candlesticks. That's the next step. Understanding the trend. And then there's another part of the trend, and it's moving basically sideways. When they be like it's just ranging. When it's not making higher highs or higher lows. It's just going in a range, back and forth, back and forth. This is called consolidation. Right? This is called consolidation. So, do you understand the difference between a uptrend and a downtrend and consolidation? Now, the next time we talk, me and you gonna be on here, and we're gonna be doing a one-on-one. So it's like I can ask you a question, and I need you to like, okay, this is a higher high, this is a higher low, because I'm gonna make you. So it's something that's called Discord. So it's basically like I can see you. So you see how you can see my screen, and I can show you what I'm doing. Discord is like we both can do it. So if I be like, okay, show me an uptrend, you can enable your chart, and then you can show me what you're looking at on your chart. So we're gonna do that another time. You know what I'm saying? So he said, yeah, it just switched. So bears. Yeah. So this is consolidation. This is an uptrend, right? And then this is a downtrend. Oh, let me do that a little bit better. And I ran out of space. Do this a little bit better. This is a downtrend. Basically like that. So that's the difference. This is consolidation. The market moves three ways. It goes back and forth, back and forth, back and forth, back and forth, where it's not making no higher highs or higher lows. This is consolidation. Right here, this is an uptrend when we're making higher highs and higher lows, higher high, higher low, because this high is higher than this high. This high is higher than this high. And that's just not it. You gotta look at the lows. Are the lows getting higher? Are the lows getting higher? Yes. That means we're in a uptrend. That means bullish. Let me draw this bearish out better because this should look more. This will be a downtrend because why? You start up, you get a low, you get a lower low from here. You cut higher low, lower low, higher low, lower low, higher low. So this is how the market moves. Consolidation. It's just going back and forth, back and forth, back and forth. Once you understand this, then we can move on to the next step. He said, so then bullish is in the uptrend. Is it down? Yeah. So that's the first. So you got any other questions about what I just went over? Do you have any questions? Right quick. So that's the beginning. So now, after that, we can focus on to understand there's different type of candlesticks, right? They form different things. Now, this, you see how some candlesticks just be bigger than others, some candlesticks are smaller than others and stuff like that. So each candlestick is telling a story. So to basically understand how to understand price action, you have to understand these candlesticks. What is it exactly doing? So I'm gonna break down these candlesticks, right? On basically exactly what it did. All right. So look, let's start with this candle right here. Right here. So this candlestick opened right here at 22,789. If you look up right here, if you look right here, you see how it says a O, you see how it says H at the top, you see how it says L, C. This is for open, high, low, close. So if you want to see where's the open of any candlestick, you see how every time I go over the mouse, it changes. You see how it changes? It's right here. So this candlestick opened here at 22,788, and it went as high as 22,845. You see the wick? It went as high as right here, and then it went as low as down here, and this candlestick closed right here. This is a bearish candlestick. So this candlestick, it opened here because bearish candlesticks open low. It closed here, opened here, went as high as 22,720, and it dropped as low way down. So the low of this candlestick is way down here at 20,597, and then it closed right here. And then this candlestick opened, which is a bullish candlestick because why? It's green. You see how it opened at the low, and it went as low as down here, and it went as high as up here. You see that? And then you see how it closed right here. So you see, this is the open right here, and this is the close. And that's how we get the body. This green zone is the body inside. So inside the wicks, it's the body. He said, so bearish open high. Yes, bearish open high. If you look at the candlestick, so these are two bullish candles, right? Look, this bullish candle opened at this low, and it closed at this high. You see, the moment it closed, it opened right here where this candlestick closed at. And you see how it went down here and it closed down here. So it opened up and it closed down here. The bullish candle opened down here and it closes up here. And then you see how back and forth, it does all of this back and forth, and then it finally goes up. So this is how you understand price action. Like, this is the start of it, to understand the candles. Because before you can understand all the other stuff, you have to understand the small thing, which is the candles. So you just have to get better at looking at the candle. So you see how this candle is way bigger than this one. It's going to be like that because it's just buyers, right? It's just, this is a big candle. This is a small candle. That's what I'm saying, small candle. So different candles form different things. So this candle right here, you see how it's super huge and it's a low wick. This is called a hammer. This is called a hammer stick candle. So if you, matter of fact, I'm gonna do it right here. So if you go on Google, right? So this is how you find different hold on right quick. Stop sharing. This is how you look at it. Share. Hold on, let me share my screen. All right. So you just go on Google. You type in candlestick patterns. Type in candlestick patterns. So you see, and you just click whichever one. Yeah, I'm gonna have a lot of information. Wait, no, hold on. Let me go back. We click to a better one. Matter of fact, you just go to images, right? Just click images. and we're gonna go to just the singular candlesticks, not right here. Bomb. Oh man, I clicked the wrong one. All right. So if you see here, I'm trying to find a good example. Okay, right here. So you see here, yeah, I cannot find a good example. I cannot find a good example right now for you now. But it's because it's small. I'm trying to make it big so you can actually see it. But it's just not giving me what I want to. Okay, bomb. Right here. Bomb. Okay, we got it. See, sometimes you just gotta keep on going until you find what you're looking for. So you see how this candle right here is called a hammer. You see how these are bullish candlesticks. You see how it says bullish up here? Matter of fact, I know exactly how to do it. I know what I gotta do it. Just type in bullish candlesticks. And go to images, right? Wow, there we go. There we go. All right. This is a good example right here. All right. This is a good example right here. Bob, let's get it. So you see how this candle, so each candle, when it forms together, it actually, so look, this is a bullish, this is a morning star, this is a doji fly. See, but these are two candles put together. So you see how this is a bullish, so it's called different things. It's called actually a hammer candle. All right. Bomb. This is what I was looking for. Damn, finally. Man, but it's not popping up. You see, I can't see it. Damn. Hold on. Hold on, hold on. Hold on, hold on. Share screen. Window. All right, bomb. You should be able to see it now. Damn, you still can't see it. Why that shit doing that? All right, bomb. You can see it now. Okay, so look, you see how it says most bullish. So you see it. This is what I'm saying. So this is how you can get familiar with the candlesticks when it's super big like that, because this is super bullish, like it's extremely bullish. See how this is a normal bullish. See what I'm saying? This is a neutral bullish. So it's just like the more you research, based on what I'm trying to say is like the more you research, the more you study, the more you actually go back and forth into it, the more you're gonna get better with it. Right? And so that's the basics. So once you actually start going there, then you work on the next thing. You see what I'm saying? And it's a constant thing. It's something that you're just not gonna get overnight. Right? what I'm saying? So that's basically the basics. Very so. Anything else? Right quick, because I think we just went for like 30 minutes. So you just gotta go back, study what we just went over, back and forth understanding the bullish. So there's different there's different type of candlesticks, right? There's candlestick that's called a bear. So there's a matter of fact. This is what I was trying to say. When you go by yourself, he said, are you gonna keep are you gonna keep the live up? Shit. Yeah, I think them shits I think it's saved. I think it's saved automatically. Right? But remember, you can just go on YouTube and type in candlesticks, like candlestick beginners, right? Candlestick beginners, and then you just watch the video they give you, and you just get better, and you write your notes, and then you work on the next step. The next step after candlesticks is the trends. We just spoke on bullish trends, bearish trends, consolidation when you're just going back and forth. Understanding that. Understand that. You see what I'm saying? The next step, which is liquidity, highs and lows. So you have to understand all of those things, right? And then you want to get into trading. Because if you get into trading and you don't really know how to use the platform, you're gonna lose money. So but matter of fact, let me go over this play I caught today, right? He said, I ain't trying to lose no cheese. Ain't trying to lose no cheese. Ain't trying to lose no cheese. Nigga, you gonna lose cheese. It's trading, nigga. You're gonna lose cheese, bro. Honestly. Honestly. You're gonna lose cheese, bro. Think about it. You have to put up money. That's how you trade. You have to put up money to trade. See what I'm saying? So if you don't put up no money, if you don't put up no cheese, you ain't gonna make no cheese. That's the real. You put no cheese up, you're not gonna make no cheese. You see what I'm saying? So that's why I say you want to trade small, right? Like it's not it's so he said, but you can hit big, fam. I see dude putting up about 20K. So look, it's levels to it though. There's different ways you can trade. Like, don't get it twisted. Niggas making 20K. But before they made 20K, they made 15K. Before they made 15K, they made 10K. Before they made 10K, they made 5K. Before they made 5K, they made 1K. Before they made 1K, they made 5 Bs. Before 5 Bs, they made 200, 300, 150. See what I'm saying? So it's like it's just you just how you can make $50 is the same way how you can make $10,000 or $5,000. The niggas just putting up more money. So you don't want to you don't want to see niggas making 20K like, oh, I'm not making 20K. You're not the person who can trade like that yet. Like I don't even make 20K a trade. I barely make a man a trade. Like today I think today I made what, 9. It said I made $900 today. But first of all, it's on a prop firm, so it's not real money. Right? I'm trying to cash out on the prop firm, so it's not real money. So for me to make the same $900, I would have had to risk maybe like, for me to make the same $900 if I took it the same way on real money, my stop loss was probably like 17 points. Matter of fact, I'm gonna show you exactly how much I would have had to risk, potentially lose to make the money that I made today. So my stop, so matter of fact, I could do it on the screen. I'm tripping. Just risk me how much money you put in. There we go. There we go. So that's the next. That's the next. It's a lot of extra steps when it comes to trading, but that's, you know what I'm saying? Yes, risk. That's the big thing. So I'm gonna show you that right now. I'm gonna show you exactly what I was talking about. Share screen. All right, quick. Hold on, right quick. All right. Share screen. Window. Trading view. All right. So let me show you exactly. I'm gonna show you the trade I took today and how much money I was risking. All right. So let's go to a one. So now you see this window up here, right? It teaches you about this. So you see these. You see these one. You see how it says 1 minute. So let me break this down to you right quick. What you're looking at? This is the chart, right? This is a chart. Now, the chart it's in. So right now we're on the 1 hour. You see how it says I have it clicked 1 hour. So this is you see right here 1 hour. So each and every single candlestick, each and every single one you see on here. How you say that, Don? It's how you say that? The entirety of the candle, like it's in 1 minute, it's in 1 hour. How would I say it? How would I?
It form every hour.
So basically, it forms every single hour. So it's every single hour. So each candlestick, it takes an hour for it to form, right? So if I go to another time frame, so I'm looking at a 1 minute, a 1 hour chart because each candlestick is in a form of 1 hour. So if you look over here to the right, see where it says 24.16? That's the time. So it's 24 minutes left on this candle. So if I go to a 4 hour, it's the same thing. This is a 4 hour chart. Now we don't trade on higher time frame charts. Oh shit, yeah, it's on 5%. I'm gonna be done in a second. So this is a 15-minute chart. You see what I'm saying? So right now I'm gonna go to a 1 minute chart because this is the chart. This is the time where I actually execute my trade, which like basically where I get in at. So I got it up here. So let me show you exactly. I actually caught the top. So this is the play I caught. So we did a sweep on liquidity. So we did a sweep on liquidity up here. I'm sorry, it was an SMT. So this was an SMT. So now this is the high I was looking at. It swept the high SMT. It was an SMT with ES and NQ. I was looking for an inverse fair value gap, which was right here to get disrespected, which was right here. And these are concepts that I'm gonna teach you later on. So I know you may not understand what I'm saying, but just follow along. So we call it SMT with ES and NQ, which means ES made a higher high and NQ made a lower low, right? So I'm looking for inverse fair value gap to get disrespected, and then I'm looking for a change in the state of delivery. So we get that right here. We get the change in state right here. So I was in, right? So now my stop loss, short, my stop loss was right here. I mean, my entry was right here. My stop loss was right here. So you see right here, it says I was risking 25 points. So now, that's depending on how you trade. These 25 points can equal up to $2 to $4 to $5. So on this trade, I was in 10. Where I was in 5, but overall I was in 10. So if I do 25 times 10, what's that, Don? Like 500? 25 times 10? 250. 250? 250? That's it? Oh my gosh, I should have gotten into so much more. Now I'm like, damn, I could have risked so much money, so much more money. Anyway, so on this trade, I was basically risking $250. And my first TP, which TP means take profit, which means this is where my target, I'm trying to take profit. I think my first, it was 50 points. So I got out of 5 contracts here. And then, so you see, I was risking basically 250 to make this first, this basically 1,000, right? Because it was 50 points. So, but instead of selling everything, I sold half. So I secured 500, and then I put my stop to break even. So now that means I'm not risking no more money at all, because the moment it comes back to my break even, which where I'm like, okay, I'm not down or I'm not up, I'm at 0, it's going to take me out the trade. So I'm not risking no money if it comes back up here. But look what happened. It just kept on dropping. And then I took out another 5, like right at 70 points. So I got out right here. So I made an overall of like $900, and I was risking $250. So you see, I had to put up $250 to make that, right? And you see, it went much lower. But the reason that I got out because I was a little bit scared, a little bit, and I didn't know exactly how far down because the liquidity, my target, I didn't really have no target. I was just risking 50 points, but this is the liquidity. I should have targeted down here, but I didn't. It was more hindsight. I didn't really see this low. I didn't really think it was going to go all the way back down there. You know what I'm saying? But anyway, so that's the trade I caught today. That was the risk. So I was risking 250 points. You know what I'm saying? So you have to risk. You have to risk. You know what I'm saying? Yeah, so we went over the candlestick, the 4 key components of a candlestick. We went over up the 3, how it moves. It moves in bearish, up and down. It's making higher highs and higher lows. Bearish downtrend is making lower highs and lower lows. And then consolidation is back and forth. Said, fam, he said, I'm gonna come back to this live, fam. I think you have to go get married, fam. No, let me read it better. No, I can't really read that well. Fam, I'm gonna come back to this live. No pressure. I'm gonna leave it up here. I have to get married, fam. I think you mean I thank you. I have to go to marriage counseling. Oh, shit. I ain't even gonna lie, bro. You know how many? That's good. I commend you for that. Because a lot of niggas won't go to counseling for their marriage, man. A lot of niggas will just cut this shit off. So that's what's up, man. But damn, man. Hope everything go good, bro. You know what I'm saying? So I catch you on another one, man. So I'm gonna come back. I'm gonna save it. I'm gonna leave it up there. So I appreciate you for tuning in. I hope I helped you. You know what I'm saying? And if you want to come back again for another session on the next step, you can do that. So okay, I have a daughter. Yeah, man. You gotta go grind. You got a family, bro. You gotta grind. You gotta grind harder than the next dude. But all right, man. I'll catch you on the rebound, man. Hope everything go good, man. Have a good counseling. Have a good meeting, my boy. Yeah, done.
Disconnected your boy. Your boy.
Oh, so now I don't know if Buddy's still in here to where he was like, "How do I find my daily bias?" Somebody asked me, "How do I find my daily bias?" Are you still in here? Yeah, salute to you, man. How long you been trading? I just started 2 weeks ago, learning on demo right now.
2 weeks ago.
Started 2 weeks ago. Boy, you fresh. Boy, clean. Boy, you fresh in the game.
New booty.
New booty. Let me give you some advice. Don't put up your real money. And he says he's highly motivated. That's gangster. Oh, you highly motivated. You know what that mean? You new money. You new money. You fresh money. You know what we call that? We call that fresh liquidity. Nah, but the reason I say don't trade real money yet, because you have to learn how to trade, right? You want to learn. So what I'm gonna tell you is it's something that's called a prop firm. It's like you can get a funded account and you only pay like $50 and you can potentially cash out. So I'd rather you only spend $50 and potentially cash out versus you go put up real money like $400-500 and then lose that money, because you're gonna lose money. We all gonna lose money. what I'm saying? The key is you want to keep your loser small. You keep your loser small by learning how to trade for real. You see what I'm saying? So, question: do you know about candlestick? You say you 2 weeks. What do you know? Like, what do you know? Do you trade future? Do you know about future? Do you know about stocks? Like, what you want to day trade? What you want to do? That boy name is V. Turn on the AC, nigga. Hey, that's a hard V. Turn on the AC. That's a hard that name. Cause I'm thinking I'm trying to turn off the AC because this shit kind of cool right now. Oh yes, I know the basics. I'm doing day trade. That's what's up. So these are the 4 key components you need to be a profitable day trader. You need these 4 key components. Risk management. Do you know about risk management? That's the first thing you need. The second thing you need is patience. Do you know about patience? That's the second thing you need, which is the most important thing.
Jesus Christ, you all that. And discipline.
The third thing, discipline. Do you have discipline in your real life? Like, are you disciplined? Are you a disciplined person now? Third thing. The fourth thing you're going to need is a high quality setup, which is an A+ setup. Like, okay, I'm about to get in now. This is why I'm going to get in. You need an A+ setup. An A+ setup is like, I don't even know about basketball. Let's say Shaq. Let's say Shaq is in the post. Let's say he's guarding you. I don't know how tall you are. I don't know how big you are. I don't know nothing about you. But I know you're not nowhere near Shaq, right? So let's say Shaq guarding you in the post, in the paint, and he has to get 1 point. He has to get 1 point against you. Wouldn't you put your money on Shaq? What's the probability that Shaq is going to win on a 1-to-1 versus you, and he got to get 1 point? That's an A+ setup. So that's what you need. Now, it's not going to be 100% because you can get lucky. Like, you can do some, you know what I'm saying? But that's what you need. He said wife and kids, another wife and 6 kids on the other. Okay. I'm very cautious, patient, and I'm learning discipline. Well, if you're so the fact that you already got kids and you already got a wife, you're gonna be way more smarter than the average person in trading because you have more to lose. So that's gonna make you patient already, but it may make you a risk taker because you have to be a risk taker. So the thing is about, okay, when to be a good risk taker, when not. So that's another thing about trading that they don't teach you. When to trade and when not to trade. Oh my God, that is so important. If you don't know when to trade, when not to trade, it'll kill you because sometimes you'll be like, damn, why is it not doing what I need to be doing? And you just don't understand why. You know what I'm saying? That's a key. But yeah, man, you just YouTube and you have to learn from somebody. So that's how you expedite it. That's how you expedite the process. Who you gonna really learn from? You know what I'm saying? Like, because you have to learn from somebody. You have to become. It's something that's called be do have, right? You have to become the person. Right now, you're chasing the have. You're chasing because you want the money. You want what trading brings, right? So you want that. You want that. That's the having. You want all of the shit that traders have, that successful people have. But in order to have that, to grasp that, you have to become the person. And how do you become the person? You become the person by doing the work. You have to become the person, which is the trader. So you have to learn how to trade for it. You have to learn what the millionaires do that trade. You have to learn all that shit. By how you learn that shit, you learn it by doing the things, right? You gotta do it. You gotta do it. Lose, figure it out. And then it's literally entrepreneurship in trading. You know what I'm saying? So, and then eventually you're gonna have. The thing is that you can't chase the have. You have to chase the process. You have to chase. Okay, I want to let it become a good trader. So how do you become a good trader? By just doing what good traders do constantly, and then you compound. This is a good game right here. God damn. Anyways, he said, I just got the candlestick master up. Good. YouTube, good, everything. Good. Now, the best thing is literally going to be the demo. Make sure you constantly trading because you want to study and then you want to implement what you're studying. So you're studying candlesticks, right? So now you know about candlesticks. You want to keep moving on. You want to watch it and then move on to the next thing. You always want to be studying the next thing. or like, you feel me? Like study what you're looking at now, and then keep learning the next thing. See what I'm saying? So after you learn about candlesticks, now you have to learn about trends, right? Because there's a what trend is that? Because now you know about candlestick. You know about, do you know about doji? You know about a hammer candlestick. You know about a, you know what I'm saying? It's different. Do you know about candlestick formations? Because different candlesticks, it form different things and it makes a pattern. Do you know about candlestick patterns? Because that's the next step. After that, you want to learn about, okay, after the candlestick, you want to learn about basically the trend. So there's three trends. It's an uptrend when it's making higher highs and higher lows, higher high, higher low. So it'll be like, it'll go low, high, higher low, higher high, higher low, higher high, lower high. You know what I'm saying? It's going up and up and up. And then the opposite, which is a downtrend. So there's an uptrend and then there's a downtrend. The downtrend is literally the opposite. It's making lower highs and lower lows. So it start high and go low, higher low, lower low, higher low, lower. You know what I'm saying? Just going lower, lower, lower. And then it's a consolidation when it's just going back and forth, back and forth, back and forth, back and forth. It's just ranging. It's not making no higher highs or lower highs or lower lows. So I'm saying, and then the next step after that, understand about liquidity. What is liquidity? Which is high. How liquidity is highs and lows. Each high, each low, that's liquidity. And then understanding that, and understanding how are you going to trade? Are you going to trade retail? If you're going to trade retail, which is basically candlesticks or breaking retests, drawing certain levels out. You know what I'm saying? Or are you going to do supply and demand? That's going to be your strategy. You're going to trade supply and demand. That's going to, you know what I'm saying? What type of style what type of trade you're going to do it. So I'm saying you learn that by watching, learning who watching, because everybody who you watch make money trading, they're trading some type of way. So it's important to ask the person, hey, how you trade? How do you trade? By the way, and he'll tell you how they trade. Either going to say I trade retail. So he said supply and demand, support and resistance, because that's the beginner, that's the basics. So it's like that's how you start. That's the next step. Once you learn about candlesticks, that's where you want to go. Look, highs and lows, all that shit. Then you learn about supply and demand, support and resistance. Understanding that support is the floor. Support is the floor. Like, so it's gonna bounce at the support. So you're looking for a whole bunch of support levels, because when it hit that support level, I'm expecting it to basically react. Is it going to bounce and keep going, or is it going to reject? Is it going to break through? Because remember, any old support and it breaks through, it turns to new resistance. Because now that floor is not, because it broke through the floor, so now that floor turns into the roof now, and that's the resistance. So, you know what I'm saying? That's how you get breaking retest plays. You know what I'm saying? Or supply and demand. Same thing. When they hit that supply zone, when it hit the demand zone, you're looking for a reaction. Is you going to go long? Is you going to go short? You know what I'm saying? So that's about the supply and demand. And then after that, you learn about key levels, because you need key levels when it hits. So, and it's about confluences. Okay, when it hit the supply zone, do I trade with EMAs? See what I'm saying? What EMAs are you using? Using the 20-day or using the VWAP? Because you need confluences. You need confluences to get into the play. Because let's say it hits your demand level or your supply level, and then you don't want to just get in off of that. Like eventually, the more you trade, the more you're going to realize, you know what, I have to wait. Okay, yes, I'm looking at that supply, that demand, that support or resistance, right? But once it get into that zone, instead of just getting in, okay, let's see what happens when it hit that zone. Because if it's a support, when it hit that zone, I'm looking for buyers to come to the market. So I'm saying, so if I don't see no buyers coming to the market, I shouldn't be buying there, because I don't see it. You know what I'm saying? So that's the next step. You know what I'm saying? But I hope I helped you out. I just went on for 55 minutes, man. I'm about to give me some food right quick, man. I catch y'all on the next one. He said, I look at the 1 hour, then I go to the 15 minutes. So look, you said, look, you've been training for 15, you said what, 2 weeks, and you're already doing what good traders do. You want to start on a higher time frame, and then you go to a lower time frame. Exactly. So keep studying, bro. Keep learning. Make sure you find you a mentor, somebody that can help you, teach you, guide you to expedite the process. That's what I'm about to go do. I'm about to go study my mentor. Is that what I'm saying? I want to see if we caught this in trade, or I want to see what he did in the con. I'm trying to see what he did in the con. That's it. Just to compare. I'm trying to use the word. It's in con. It's a word that called. It's another word that you need. So I'm glad you gave me that one. I'm just trying to see my mentor to compare his thought process with my thought process, to see what he did right or what he did wrong. You know what I'm saying? You know what I'm saying? Anyway, so he said, "Okay, thanks, man. I'm gonna tap in with you then when I see you on the screen." So I don't really stream too much. I only do streams. So I only got on the screen today because I went on. Well, I actually do stream in the morning. I trade live in the morning. So, but besides, but this type of screen you see right now, I don't really do this because I just did this because I just had a one-on-one with somebody. So I just had a one-on-one with somebody. So that's why I just jumped on. Man. But no, I appreciate you. Maybe see me again. Tap in. I'm gonna always remember your name. V, turn on the AC, nigga. I like that name. V, turn on the AC, man. He said, "How long?" I do. He said, "Do you do phone calls?" Yeah, I do phone calls. I have a community. I do Zoom calls. Shit, I just did a Spacia Zoom call, but this wasn't a Zoom call because he's somebody new. So I wanted to see where he had his knowledge first, and then once he's serious, then I do the Zoom call in my Discord. So it's like I flip screen and shit. I want to see your screen. I want to see what you're doing. It's better like that because I can see your screen and see what you're doing and help you out from your screen. So yeah, I do all that. So you do what facts. I'm on the bad tattoo. That's it. Hey, you funny boy. You a funny. Hey, how can I follow your Discord? So when we go off the live, right? If you go to my descriptions, you go to the top of my description, and if you click the link, it'll say my Discord. But if you follow me on IG, so look, I'm gonna type in my Instagram name on IG. DM me. Hey, make sure this is my IG because niggas be scamming and shit. So DM me. Casino Trade. This is my IG. DM me right quick, and I'm gonna send the link to my Discord. And then shit, we can do a one-on-one right now. Well, after I finish studying. Bro, it's 10 o'clock? Oh shit. Yo, I gotta get up out of here. All right, my boy. So yeah, hit me up on IG in my DM, and then I'll send the link to my Discord. If you can't find my Discord in my subscription link on YouTube, because it's there. All right, my boy. Catch you on another.